Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, despite the stock market ruling at record high levels, the inflows into equities as an asset class by Indian households remains in single digit, suggests a recent note by Jefferies. Investment into real estate, gold and bank deposits are still among the top drawers for savers. So why are investments in equities still in low single digits, and what can we expect going ahead? Let's get all these questions answered by Gautam Kalia, Vice President, Head Super Investor at Sharekhan by BNP Paribas. Gautam, good evening and welcome to the show. All right, so this report, we just had AMFI numbers come up earlier this week, and we saw record inflow again in equity and especially through SIP. But the report that we're talking about still shows that Indians have traditional investment instrument as their preferences when it comes to parking their money somewhere. What kind of a mindset are we talking about over here? And what's surprising that there has been a change after the pandemic, but then it's not still, considerable on the basis of which we could say that India is now an equity investment destination for Indians. We still can't say that, Gautam.
Yes. So, in fact, the report clearly highlights that, they've been publishing this report, this study since 2006. And in the last, 16, 17 years that they've been publishing it, what they found is that this is probably the third instance, where it's beaten 4%. And the last time it was in 2008, which was 4.2%. And then it was 4.3% in 2021, and now it's gone up to 4.8. Now, this 4.3% in 2021 and 4.8 also maybe have to do with a little bit of the function of the market, with the market going up. But I think what is very clear is that that it's still very much below 5%. In fact, most years it's remained below 4%. And I think it's an extremely emotional decision investing still in India. And there are a lot of there's a lot of logic that people put when it comes to saving money and investing. There's a lot of thought process there. It's a consultative process, so you talk to your friends, family, and I think because of that, the conventional wisdom or the wisdom passed on from one generation to another still holds a very tight grip on the thought process. So I know so many people, even people who are in the investing field, they say, we are making investments in the equity market, but to what end? Ultimately, we need that money to buy a house, and if I can afford a house now by taking a larger loan, then I might as well do that. So that's another thought process. But I think with mutual fund Sahi Hai and the campaigns that started in 2017, with all that effort being put towards educating and informing investors, I expect there to be an increase, in this allocation, especially on the financial asset side. And that is something that the study also points out, that since 2014, gold and real estate, which are the physical assets considered as per their category, they have been receding some share to cash, pension fund, insurance, mutual fund. All these financial assets, they've lost share by up to 8%. And that trend is consistent. So even though it may not be, even though mutual fund or equity investment may not be more than 5%, the entire physical asset allocation is now gradually reducing. But it's still very, very high. So just to give you a few numbers, for example, real estate is at 49% still, and gold is at 15%. Bank deposits are at 15%. So I think still very conservative approach. I guess with more education, people will get gradually more and more comfortable to invest in equities.
All right. Gautam, one more thing, that specifically gets highlighted is the lack of knowledge towards equity as an asset class. So it's not something that we are not aware of, and a lot of campaigns that even you've mentioned, were introduced with this entire purpose of financial literacy. And although we've seen a lot of things change since the pandemic, but then the bigger picture still remains untouched, and we are still not there. Maybe a few steps ahead, but then, yeah, we need to do a lot of things. So when we talk about lack of financial instrument knowledge, and when we talk about lack of investment in equities, what exactly is the myth now? What exactly is the understanding now? Where is it lacking? Or where are the wrong informations? Which are the wrong informations due to which people are not interested in this asset class, or that's holding them from investing in this?
So, excellent question, Kavita. I think the first point really is, do people have access to information? Are there enough, I would say, avenues for them to get information on investing in equities in their language? We see in the industry data published by AMFI so many times that it is not the larger cities now that are growing rapidly. It's the smaller cities that are growing rapidly. So it's the beyond 30 cities that are growing, and that's really what is if that trend continues, then more and more financialization of savings will happen. More and more investors' allocation towards equity will increase. Now, when we come to the other point of what are the stories, what are the myths, I think the understanding of risk associated with equity investing, that is still, I would say, not there. And the reason there is that the kind of news, or still people remember, let's say, the scams, or the people taking a lot of let's say leverage and investing in equity, and losing all their wealth, and then you have these news of suicides. So I think those kind of stories, coupled with, let's say, a lot of fly by night operators, a lot of unscrupulous chit funds, or access to those which are offered locally, which offer great riches and then kind of turn sour. I would say, Ponzi scheme type traps, which maybe people are exposed to or have access to locally, and those kind of things also, they kind of share the same thought process, saying that, okay, this is similar to stock, so let's not get into it. It's better to keep it safe. At least putting it in a bank fixed deposit is safe. We don't have to go through all this. It's our hard-earned money. So I think that's really, those are the really other factors that come into play.
All right, so that's the current scenario or the pictures when it comes to Indians investing across asset classes. We'll take a quick break, but then post that, let's focus on our viewers' queries with Gautam Kalia.